Field by field, Maizex is bringing Canadian seed to farmers across Canada. Maizex is your source for high-performance soybeans and grain, silage, and grazing corn hybrids. Visit maizex.com to find your local Maizex representative.
Let's get into the beef market update with Ann Wasko, the Gateway Livestock Exchange. Ann, how are we doing?
I'm good, Sean. How are you today?
Hey, I'm doing fantastic. I'm doing good. Can you believe that we are already into the back end of August?
No, I cannot. What a summer. It's just been flying.
It very, very much has been. Okay, let's get into what's going on in the cash markets south of the border as well as up here.
Well, in both cases, lower, I guess, in a nutshell. It looks like we haven't seen much south trade, but in the north, 190 live caught most of the cattle so far this week. That's 3 lower than last week. Dressed sales in the north, 298. That's 7 lower than last week. And so with that, remembering that we saw Texas and Kansas last week at 186, I would expect we're going to see a bit lower than that this week. But also remember, we've been narrowing that north-south gap up. More cattle coming on in the north versus the south, and so it might not lose as much money as what we've seen in the north. So we'll keep an eye on that. The cutout last night, the choice cutout, closed just under 317. So looking back versus last week, that means it is up $4.50 from last week. And again, getting supported from the smaller kills we've seen of late. So that's the reason why the cutout's up a wee bit. The spread between choice and select is about $15 back. Again, pretty typical for this point in August. Locally, just bringing it back to the Alberta market, Sean, we saw fat cattle. It looks like when all the dust settles, we're going to be off probably $7 to $8 dressed. 418 to 420 delivered is what I've been hearing so far. So again, when Canfax reports their weekly average, it's probably going to be down into that low 250s this week. And if you're keeping track, wondering where does that mean from a P&L perspective? If you're on the spot market, and again, yes, there's not a pile of cattle on the spot market anymore, but probably into the red for sure, averaging break-evens probably around 260. So for getting cash cattle in the low 250s, you can do the math from there.
So this is where we got to be careful, right? We see higher prices or high prices relative to, say, the 5-year or 10-year average for sure. It doesn't mean necessarily more profit because the cost complex has increased so much as well.
Exactly. So even though we've talked about feed grain prices coming down and that cost of gain to put the pounds on is certainly lower than what it was last year, you and I both know, and the listeners know, what feeder cattle prices have done versus last year. So that's why that break even is staying pretty elevated.
Yeah, a bit of a separation here between what's going on in the futures market and what's happening in the cash market.
Yeah, for sure. Yeah. And again, the economic news that we've had out over the last week to 10 days in terms especially of the U.S. economic news and concerns of where we are in terms of possible recession, unemployment, all those things, putting lots of weight on all markets, including cattle markets and commodity markets. Certainly that pressured the 2025 contracts. People are kind of a, I'll believe it when I see it kind of, mentality, whereas today cash is cash. And certainly cash is stronger than what we're seeing in those deferred contracts.
Well, there's some, I don't know if it's irony, but what comes to mind is, this week we heard President Biden and presidential candidate Harris, Vice President Harris, talking about, mentioning beef as an example of inflation at the grocery store and food costs being high and gouging of the consumer. Here's the reality. The economics is that as producers, we need the prices to be at what they are today, whether the consumer likes it or not, if we have a chance to scrape out a profit. That's the realities of the market right now.
It is. And of course, at all times over history, somebody's going to be making some money and somebody's going to be losing some money within our complex, right? And so today, for sure, looking at retail prices, they've been pushed higher. I think we talked about that 2 weeks ago. And whereas the cutout value, that wholesale price, is actually lower than where it's been. So everybody's getting a different piece. The argument today is the retailer's getting too much. So, but everybody takes their turn.
Next week I'm going to be at the Canadian Beef Industry Conference, and we're gonna do a live recording of Real Ag Radio. I'm looking forward to it, to do it from the stage when we get an opportunity to do it, like we did last year at CBIC, and we'll do it again next week in Saskatoon. We're talking a lot about trade. Can you give us a bit of an update on beef exports?
Right. I suspect convention goers are going to hear quite a bit on trade. So we did just get the StatsCan numbers for June out this past week. And certainly, remembering back to June here in Canada, of course, we had that big strike at Guelph. So that impacted how much tonnage, how many cattle we killed, how much tonnage was being produced. And so it showed up in the data. It's funny how it all works out at the end of the day. And so we did see smaller exports in the month of June by 7% versus last year. Year to date, they're still up 4%. So Sean, June was the first month this year that we saw year-over-year decline in exports. So up until now, they've been up, which has been a good supporting part to our demand story. But June was down 7, largely, again, due to that strike in Guelph. So year to date, we're up 4 in volume, up 3 in value. It's still a good story, going on in terms of that demand piece. Just breaking it down by country, our 3 main destinations for Canadian beef. To the US in June, we were down 5%. Year to date, we're still up 7. To Japan, we were down 22. Year to date, we're still up 6, though. And to Mexico, we were down 37. I can see, looking at the US data, Mexico has been a bigger piece of their destination market, and I suspect there's been some trade-offs in terms of Canadian versus US beef there. And for the record, US beef exports, we've just talked about Canadian. US beef exports in June were down 2%. So kind of across the board, looking at a little less. But again, it'll be interesting to see what the experts on your panel and next week talk about in Saskatoon.
Yeah, and I think it's also important to keep in mind that's, for June, so we want to make sure that we're paying attention to that year to date over the last 12 months, a bit of a broader timeline to see kind of where that trend is headed. If we get to July, August, September, October, and we're still showing, down year-over-year results, then I think there's a little bit more cause for concern. But hopefully, though, that Canadian number being down 7 has a lot to do with that Guelph strike, as you indicated. We also have some updated numbers when it comes to feeder imports.
Yeah, I don't think we've talked about this for a bit, Sean. So we just got the June feeder import data out, and we saw just over 22,000 head imported in the month of June. That's the same as June of 2023, again, keeping track. Year to date, our feeder imports, Sean, are up 7%. We're sitting at about 143,000 head have moved north. So on a monthly average, because again, they move around as you suggested, month over month. So far this year, our monthly average imports have been between 23 and 24,000 head. That's the same as last year. So it almost, to me, looks like, Sean, we found a place where feeder imports have stabilized. This is where the numbers are for now. But we'll keep an eye. We also have to talk about exports, because it's only one piece to talk about the feeder cattle that are moving north. The feeder cattle moving south are certainly much smaller. This year, when you look at that net trade between feeder imports and exports, we're sitting up 11% net import. And so that number is 77,000 head. And why does that number matter? Canada used to be a net exporter of between 300,000 and 400,000. And so that's what's really changed. That's been, and that was kind of, even looking at the period from 2005 to 2015, that we saw kind of that 300,000 to 400,000 net export. So that's really changed the Canadian feeder supply that we used to think about. Now we're a net importer. It looks like it's pretty steady, and that's a regular piece of our supply that we have to acknowledge and understand what's filling these feedlot pens.
Smaller herd factor, more cattle on, more feeding capacity.
More capacity, exactly. Especially as we head into the fall of 24.
Yeah. So it's that's quite the reversal. Like, when you really think about it, like those aren't small numbers. Like, we're going from 10 to 20. Like, we're talking hundreds of thousands.
Exactly. And so again, as you wonder, how have we kept production at these levels here in Canada? That's the feeder supply story has simply changed.
And you mentioned the word, we found stability. Could it be we found a cap? Or not?
I'm nervous to say cap simply because the Canadian cow herd has continued to get smaller. I wonder in the years as we go forward, do feeder supplies increase to make up for that smaller calf crop going forward? So I think it's stabilized for now. For a few years, it was just growing, growing, growing. Now, in the last couple of years, it's stabilized. I'd be very cautious to suggest that that's a cap.
Okay, cool. You know, and if you look at that December live cattle future, you know, we're bumping around that 178 right now. If you look at the chart here in the past year, it looks like 190 is kind of a number that the market says, yeah, you know, speaking about caps, it kind of looks like a bit of a top for us.
Yeah, so far for sure. Now I think the argument as we go forward into 25 and 26 is that supplies get smaller again, especially from a US perspective. And that number, that cap that we've seen kind of stop the markets in 24, I think is going to get pushed for 25, to be honest with you.
The supply cycles here are so long, right? I
They
was
are.
listening to Bloomberg Radio this morning, and they were talking about how, you know, one of the reasons why beef is expensive in the store is lack of supply and the numbers going down. And one of the analysts said, we need to have more. Let's make more beef. It's just like, oh, if only it was that simple. Like we're expanding a car plant or something.
Yeah,
So
okay. By 2030, we'll get at her.
exactly. Hey, Ann, have yourself a great weekend.
Okay, you too. Thanks, Sean.